TJ the Wheel Deal coming at you live. It is Tuesday, January the 11th, 9:11 a.m. Central Time, Texas time. Oh boy, there's a lot going on in the market today. A lot going on in the market today, and it's not really going our way yet. So let's talk about it. I feel like it's real important. Is my cap on right? It's driving me crazy. It's at my hair. I'm having a bad hair day. You'll see where the hair is growing a little bit. I got to shave. It looks like somebody threw rocks at me. um, a lot happened over the weekend. A lot happened over the weekend. I thought we are gonna have an awesome, chill weekend, and that's just not how it worked out. This is not how it worked out because somewhere along the way, probably around Saturday or so, it seems like the Donald's angry because I didn't get the Nobel Peace Prize. Should have gotten the prize. Melania, let's stir up some shit. I need the trophy. Baron, call your friends. Get on social media. So Donald wants a trophy. Donald wants a trophy. He wants a freaking trophy. He wants a trophy. This is all I got on my desk, Donald. I mean, if this will work for a peace prize, bro, I got this for Christmas. I'll send it to you. I'll send it to you. Still Bulls and the Bears right now. The Bears kicking the Bulls' ass this morning. Thanks to you. My God. My God. Is this dude a middle child? Is he a middle child? Y'all know what middle child syndrome is? It's not like a real thing, but it's kind of a thing. It's you have the firstborn. What the heck is on my? You have the firstborn. They get all the attention, and then let's just say it's a Mexican family where they have like the Mexican twins. What are Mexican twins? Kids that are born like within a year apart, right? Because they can't barely wait the 40 days for the mom to recover. The dad's like, no, let's make another baby. And then they have another baby like 11 months later, and then another baby 11 months later. So let's just say Donald's in the middle here. So you have the firstborn, they get all the attention. Oh my God, look at the baby's firstborn. And then immediately comes the second child, the middle child. And then it's exciting for that kid for a little while, but then shortly thereafter, here comes the little baby. Here comes the baby. So it's always the firstborn and the baby that get all the attention. And then the middle child, they kind of like forget about the middle child. So the middle child's like, well, I'm going to create drama. I'm going to stir up a bunch of shit because I want attention too. That's the middle child syndrome. I feel like the Donald suffers from the middle child syndrome. It's like no matter what, he needs the attention on him. He needs the spotlight on him. It's unbelievable to me. It's unbelievable to me. Like, relax. The world's big. There's 7-8 billion people in the world. It doesn't all have to revolve around you. My goodness. I just wanted to relax. I didn't want to even look at the price of Bitcoin over the weekend. I enjoyed having a long weekend. I felt refreshed. I'm finally not really feeling under the weather. I'm going to go get my first real workout of the year today. It's already 20 days in. And I'm like, this is awesome. And now freaking Bitcoin's under 90,000 and the market, the Dow was down like 700 points. Last I checked, the portfolios collectively are down like 1.5 million dollars. Guys, we got a case of the Mondays. We've got a case of the Mondays. It's just another Manic Monday. We'll see what happens. Hopefully there's a turnaround and it could be all, full steam ahead. But I'm not sure. So what I want to do is I want to go ahead and start with 1 minute with God. I've already recorded this and put it on X. So this one I'm not recording, but I'm going to read it to you guys. And it's on wisdom. It's on wisdom. I'm not able to I don't need the glasses on right now because I broke them. I broke them. Took off my motorcycle helmet, and it wasn't enough that they fell in the ground in front of me. I had to run them over. So it's just, it's like the stock market this morning. It was an absolute shit show. Absolute shit show. Anyway, January the 20th, wisdom. Is there any wisdom apart from God? Is he the only source of wisdom? True wisdom comes from God, although God may use other resources, such as the world he created or other people, to provide you with his wisdom. Be careful to evaluate these other sources. While they may seem insightful or able to offer good advice at times, screen everything against the wise words of God recorded in the Bible. When you read the truth every day, you will get better at discerning the lies of the evil one. God's response: don't be impressed with your own wisdom. Instead, fear the Lord and turn your back on evil. Proverbs 3 and 7. In him lie hidden all the treasures of wisdom and knowledge. Colossians 2 and 3. The wisdom of the world is foolishness to God. As the scriptures say, God catches those that think they are wise in their own cleverness. 1 Corinthians 3 and 19. God's promise. By wisdom, the Lord founded the earth. By understanding, he established the heavens. Proverbs 3 and 19. So, guys, we gotta seek to him for true wisdom. I think fellow man means well, and I think we all like impart our experiences on others and hope that they learn from our walk. But at the end of the day, you gotta be able to discern like what makes sense for you and what doesn't make sense for you. And powerful scripture this morning. Powerful scripture this morning. We all could use a little wisdom. Let's navigate the markets. I think it's time to see what's going on. See what's going on with the markets. Oh man. Yeah, it's beautiful. Down collectively 1.4 million. So I'm going to stay over here for just a second before I shoot over to the website where it's a little bit more visually friendly, if you will, because there's some metrics that I always need here before I go to the other side. And the first metric that I look at, besides the very, very first metric that I look at, is the profit and loss for the day, because you read this from left to right. After that, I skip over all of that. And I go towards the far right where it says buying power usage and buying power usage percentage specifically. So I look at that column and I'm looking at 43.8%, no issue. 60%, slight issue. 58%, monitoring. 62.8, slight issue. 45.8, sweet spot. 55%, sweet spot. 51.4%, sweet spot. 56.4%, sweet spot. 98.8%. What's going on? What are we even doing here? So let's start with that one. Account ending in 47. That is the Sun's DGen account, all in on BMNU leverage ETF that is tied to BMNR. So this is a situation where when you play stupid games, you're entitled to stupid prizes, right? Going all in on the leverage ETF, and then all of a sudden it isn't working out for you. I mean, you kind of got it coming, right? You kind of got it coming. So let's talk about it. So what's going on with BMNU? Let's pull up the options chain and let's look at it. So we are actually up $3,350 over here on total P&L on the options. Why? Because we sold covered calls. We ran a covered call campaign. We collected $3,350, and those covered calls expired worthless. So we were in that trade for 25 25 days on 5 contracts, 29 days on 11 on 80 contracts, and they expired worthless. It says right there expired, if you guys can see. All right. So this is where there's two schools of thought. This is your teaching segment. So I'm just going to glance through some of these positions today, but whenever I find something that I feel like could be a legitimate teaching segment for you guys, I'm going to really zero in on this to give you guys max value today. So there is something that we could really, really learn here. There's two schools of thought. One is sunny and 75. I'm going to wait for a nice green day. Surely this thing's going to turn around. And I'm going to wait for a nice green day. I'm going to wait for a bit of a recovery, maybe to 520, 525, 550. Right now it's trading at $5.01. Y'all can see right there. And then I'm going to sell covered calls. Because if I just do it right now, let's see what it'll yield us. Keep in mind, the strike price on the last go around was at $11. Keep that in mind. And this is where it's really, really important to keep track. Fortunately, on Tasty Trade, they keep track for you. So I'm like, okay, well, we brought in 30 cents a contract last time on 5 contracts, 30 cents a share or $30 per contract. And then on 80 contracts, you see the little 0.40. That's how much we brought in. And that's why it added up to $3,350. So we already know that. We have historical evidence. We have empirical evidence. It is irrefutable. It's right there in black and white, so to speak. It's right there in green and red and white. Right? Those are the colors on there. I see some yellow. That's how much they paid us on the last round of covered calls. But the good news is that it was a pretty decent amount of premiums. But the even better news is that it qualified us for capital appreciation all the way up until $11. So if BM&U shot up to $11, you take that $11, multiply it times 8,500 shares, and you're in good shape. You're in really, really good shape. I got the little calculator here. So $8,500 times 11. So you're basically saying, hey, I'm going to get paid $3,350 for agreeing to buy these, for agreeing to sell these shares at $93,500. That puts the account dang near $100,000. Where do I sign up? That's why it was a no-brainer to sell the covered call campaign, to sell the covered call on the entire campaign, on the entire portfolio, because it's all, it's all on BM&U. So that's one school of thought. It's sunny and 75. Here's the other school of thought. If you feel like there's not an immediate catalyst to the upside, so we could talk about why would I potentially feel that way? Well, we got the Donald angry about his participation trophy, right? Because he feels like he should have won the Nobel Peace Prize. And I feel like he's hell bent on creating problems because he's angry about this stupid Nobel Peace Prize that happens to be very important to him, apparently. I'm like, dude, I don't know if this stuff's going to bounce. And there's no cash in the account. There's $534. That's it. Not even enough to buy 100 shares. So can't add to this position short of injecting cash into the portfolio. Or you can do what I call creative finance. You can do some creative financing. And what do I mean by that? Because if we look at our options buying power, there's only what? $534. Stock buying power, there's 1,069. So theoretically, if we wanted to max out the margin, we could buy 200 shares of BM&U to average down, right? Because our cost, our trade cost, our average cost is $6.13. Or there's another thing that you could do. This is a little bit more advanced. Maybe it's not recommended for all, but this is always based on an investment thesis. This is always based on where are you at in the current price wars? Because whenever you're selling options, make no mistake about it, you're playing price wars with the market. Let me say it again. Whenever you're selling options or you're buying options for that matter, you are playing price wars with the market. You're basically saying, I think that the share price is going to be trading between here and here, above here, below here, whatever. You're playing price wars. It's price wars. That's what it is. You're playing price wars with the market. So you have to have a reason why you believe that, whether it's an impending catalyst, a binary event, earnings, the Fed, the ruling on the tariffs, whatever it may be, that convinces you that the share price is going up or down by a certain day and it'll be at that level by a certain day. Those are price wars, right? That's what selling options is in a nutshell. It's like you're playing price wars with the market. So this is something that I have often done, and this is how I built such a massive position on SoFi, because I want y'all to picture this. I bought shares of a company and they didn't immediately go up. Isn't that crazy? I know it's never happened to y'all, but it happens to me. I buy shares of a stock and they actually go down. They don't go up. I know if you read posts on X, you automatically think, well, everybody just makes a shitload of money in the stock market. They buy shares and then they 10x, they palantir on you, they hood on you, etc. But that's just not really how it goes for me. I'm just not that fortunate, that lucky, if you will. Not that good at timing the market like some people are. So this is what I've often done is I've created an artificial injection of cash by selling covered calls on a position when it wasn't optimal. And then I took the premiums that Mr. Market gave me and I used those to buy more shares, especially whenever it was going to allow me to average down a little bit on the position. And then I took so let me walk y'all through it. So this is what I'm talking about. This is not Sunny and 75, but you're creating your own Sunny and 75. Because in order for this portfolio to go up $8,500, we need BMNU to go up $1, right? We can all agree on that. You have 8,500 shares. So if it goes up $1, you're up 8,500. It goes up another dollar, you're up an additional 8,500. It works the same for the flip side. If it goes down $1, you're down 8,500. If it goes down another dollar, you're down another 8,500. Well, the net liquidation value on this particular account right now is about $43,000. So there's been a pretty severe drawdown. At the highs of last week, it was at about $60,000. So this is what I've done in the past, and it's something that I'm considering doing right now. And it's when you take your cost basis, which in this case is $6.13, and you're like, I don't care where the share price is. I'm going to be mechanical because I'm underwater right now. Because, yes, I made the $3,315. We go back to the options chain, $3,350. That's locked in. But I'm currently down on the actual shares. So overall, collectively, this is a losing campaign. The reason it shows profit and loss year to date positive is because, and you go over here and you look at the realized and stuff over here too. The reason that shows positive is because we had a winning campaign on the covered calls. The reason that this profit and loss year to date shows positive is because of where BMNU was at the end of last year in comparison to this year. So that profit and loss year to date is a little bit skewed always. Because when we brought positions over from Robinhood over to Tasty Trade, it's like, well, you own the shares when they were up here. Now they're trading down here. So you've lost a lot of money. And I'm like, well, I guess kind of you could say that we did from the standpoint that we didn't sell the shares up here and now they're trading down here. So that's money that you're not qualified to receive right now if you were to close out the position. So I get why they annotate it that way. But what you really got to look at is your realized profit and loss, right? Your realized gains versus your unrealized gains. So what I have considered doing is I open up the options chain and I'm like, okay, well, I know that if I bought the shares at 613, and if I agree to sell them at 7, that's agreeing to make an 87-cent profit on the shares. So if I wasn't feeling really bullish on BM&R, which would obviously lift up BM&U, I could say like, hey, I'm going to put these shares for sale at $7. How much will you pay me? And Mr. Market's going to be like, I'll give you $4,000, 4,300, right after the fees, 43.99.20. So then I sell those covered calls for agreeing to make 87 cents per share, right? Because you bought them for 613, you're agreeing to sell them for 7. So you subtract, right, the 13 from the dollar. That gets you 87, where I went to school. So you're like, well, that ain't too bad. That's like $8,000. So I qualified for $8,000 of capital appreciation. And then I bring in $4,399 today that would immediately go to the buying power. So that's going to put the cash over here close to $4,800 or so. So then now you look at the current share price, which is 515. It's climbing a little bit. So you're like, okay, let's say I have $4,800 divided by 515. How many shares could I buy with that? And that's going to allow me to buy about 900 shares. So if I pump those 900 shares in, that's going to bring me to a total of 9,400 shares. And then I turn around and I sell covered calls on those 900 shares. And that's going to bring in like another $450 or so. That way I still have a little bit of cash to work with in case if this thing gets to like 90% and I just on the covered calls and I just want to close it out and it takes $500, $600, $700 to do so. I have the money to do that. And then you kind of hope that the stock goes sideways, because you're not done building out your position. And that's exactly what I did on SoFi. And that's how I was able to accumulate so many shares, is I had bought a bunch of shares. The stock, I sold covered calls. The stock went sideways a little bit down. And then as soon as the covered calls expired, I didn't care what the price was. I was just going to sell covered calls above what I paid for the shares. And then I was going to use all of that premium to buy more shares, which averaged down my position. Because if I have 85, in this case, I have 8,500 shares at 613. I buy an additional 900 shares at say 515, 513, if you will. That's probably going to bring down the entire collective to probably $6, give or take, just doing some basic math in my head. It's probably going to bring it down close to $6. And then I'm agreeing to sell those for 7. I'm like, and we get to 9,400 shares. So you're making almost $10,000, between $9,000 and $10,000 on the capital appreciation. You just literally bought 900 shares with other people's money. And then now you're like, man, wouldn't it be cool? This thing goes sideways for 3 or 4 weeks. And then we do this again. And then we find ourselves looking up at the screen and BM&U is now trading at $6, 613, 615, 650, 675. And your option expires worthless. You log on Monday, and instead of a gap down, now you have a gap up, and now it's trading at like 750 or something like that. and you're like, holy moly, now I've got 9,400 shares. It's trading at 750. The value of the portfolio went from 43,000 when I did the last cover call campaign. Now we're approaching $70,000, and now I can sell cover calls at, say, $8 really, really aggressively. And I bring in more premiums. This time it's not going to be 4,300. Maybe it could be 5,300. And then I do the same thing. I take that 5,300 and then I go buy another 7, 8, 900 shares, whatever I'm able to buy. And then I immediately put those shares for sale up again. And then eventually the thing just shoots up to $11. And you're like, man, that sucks. I could have written them all up. But then I challenge you to do a little bit of math. If you were able to accumulate another 1,000, 2,000, 3,000 shares along the way, and you're just getting an extra dollar of capital appreciation plus all the cover call premiums along the way, because you just stayed mechanical selling cover calls using those premiums to buy more shares, and you look up and it's about your share count. It's about your share count. If I rinse and repeat this idea of a strategy, and I go from 8,500 shares to say 12,500 shares before BMU catches a bid, and I'm able to ultimately get $1 or $2 of capital appreciation, or if it shoots up to 11, and let's say at this point I'm sitting at $8 on the strike price. Now I can decide whether or not I want to play the shares from behind, meaning I want to go ahead and roll out another month or two and try to increase my strike price just by $1, because if I'm already at like 12,500 shares, every dollar that I increase it is $12,500 to the bottom line that I'm qualified for in capital appreciation. That would go straight to the net liquidation value. So it's just a different way to play it. Or you can just wait until it's sunny and 75, because you're like, no, I'm going to wait till it's at least at $6.13 or $6. And then I'm going to sell covered calls. And I'm going to agree to sell them at $8 or $9, at least $9, because I was at $11 before. And the more that I wait for the stock to go up, the more premiums that they're theoretically going to pay me. And then I'm not going to do anything with that premium. I'm just going to chill out with it. And if there's a pullback and it comes back down to like 490 or whatever it was earlier this morning, then I will deploy those premiums then. And that is what I want to talk to you guys about today. I gave y'all the scenario. I gave y'all 2 or 3 different ways to ride the horse. And that's why I'm going to die on this hill. The jockey is probably more important than the horse, because depending on how you choose to ride the horse, depending on how you choose to play the stock, it's going to yield a totally different result. And that's why selling options isn't a one-size-fits-all. There's so many variables, but mostly, the biggest variable is you. The share price is a constant for everyone, guys. The strike prices on the options chain, the premiums that are being paid, they're constants for everyone. But depending on when you choose to push your buttons and why you choose to push those buttons and how long you let trades play out, when they go for you or when they go against you, is ultimately going to start yielding some very different results from wheeler to wheeler. So you can take the same bankroll, the same parameters, play the same stocks over the course of a 1-year period, and eventually you'll start seeing very, very different results between the wheelers. Hope y'all got something out of it. What am I looking to do? I like to see it get to at least 525, and then I'm going to sell covered calls. I'm going to sell covered calls, and I'm going to be mechanical, and I'm going to use those premiums, and I want to buy more shares. So I'm trying to get to 10,000 shares. But I want to get to the rest of the shares not with our money. I want to use other people's money. I want to use the premium, right? The premium comes from other people. So that's the idea. In a perfect world, it bounces to 550. Then I put the cover calls on at 8 because I want to qualify for more capital appreciation than just the 613 to the 7. So I wait till it gets to like 550. And I have to be in such a hurry. I could wait for a little bit of Sunny in 75. I agree to sell these shares for 8. And then there's another pullback, and I look up and the shares are back down to 5. And then I'm probably able to buy an extra 100 shares because I was patient. So that's kind of what I'm looking for, because I want to get from 8,500 shares on this round of cover call selling to 9,500 shares. So if I wait a little bit longer to sell the covered calls and I bring in $5,000 in premiums instead of the 4,300 if I had sold them just a little while ago. And then I'm going to wait for a pullback. If there isn't a pullback, well, then it is what it is. I'm sitting there on $5,000 in cash. The portfolio looks a little bit more balanced. Instead of 100% buying power utilization, we're going to be at like 85% or something like that. And we just start building our cash position, and we, because we're waiting for the pullback on that particular stock. And if I just keep running successful cover call campaign, bringing in $4,000, $5,000, $6,000 a month, I look up in 90 days, 120 days, and you got $15,000, $20,000 in cash. Is that so bad? Is that so bad? So you can't just be looking at expiration date to expiration date. You have to like visualize, well, what's it going to look like down the road? How do I want it to look down the road? And then you got to start making plans to build that highway, so you can get to that destination. Anyway, let me check in with a couple of you guys. Angel, what's going on? Manish, good morning. Creed Dog, first time on the live right on. Welcome. Love to have you here. What's going on? Kenneth Brown, bring the joy to the shit show. Good morning, Danny. Hey, TJ, can you do a quick review of the poor man cover call and the rich man cover call? Yeah, we have time. We'll definitely do that as well. Doug, what's going on? Giorgio sold some 14s on what? On Rivian. Okay. There's a lot of hype on Rivian right now. They make a beautiful vehicle. Hard to see Rivian going below 15, man. It can happen. Trust me, it can happen. TJ, why not sell puts on BM&U? On that account, there's no money. There's $500 on BM&U, right? You could theoretically, I could sell the covered calls, and then I got $5,000 to work with. And then you can sell the puts. But because of the way that margin and requirements and every maintenance requirements and stuff work out, that's the kind of stuff that like could potentially put you in a margin call. That's why when you already own the shares and everything's covered, I'm like, we're good. We're good. So that's, I just feel like it complicates things. I'm like, I just at these levels, 50 cents here, 60 cents here, like it's just not that big of a deal to me. It's about share accumulation, because if I can get up to 10,000 shares, which is kind of the goal, I would love to get to 12,500, but let's just say I get to 10,000 shares. Every dollar is 10 grand, man. You do that 4 or 5 times, boom, we're at $100,000 again. Because I'd already hit 100,000 in the account, but then I had to freaking ran out of places to find money to make good on my taxes. So I had to pull like 50,000 from this particular account, and that really hurt the account, right? So now I'm like, okay, I'm going to do something a little bit reckless. I'm going to go all in under the leverage ETF, and I want to get back to $100,000 bucks. What the heck is that? I was eating something. I feel like I got some of my teeth. Anyway, so that's the thing. So it's just, you've been following the channel for a little bit. That's what's going on with that particular account. I don't normally condone those types of plays or anything, but that's the type of full transparency that you get on this channel, right? I show you everything, the good, the bad, the ugly, the indifferent. Whenever I'm acting like a degen, that's why I've been referring to this particular account as the degen account. because I'm doing stuff that I don't recommend. This is outside of the norm right now, but I saw an opportunity there with BMNU, and now I was like, I think I can manufacture the win. Worst case, sell covered calls at 7, do that a couple of times. That's going to offset what we're down on the shares. And then if I say, screw it, I just want to exit, well, all the premium that I made along the way, if I exit for a break even on the shares, all the premium that I made along the way selling the covered calls, well, that was my profit. And it was a profitable campaign all the way around. Anyway, buying power, BMNR, CSPU 20. Man, that is something I've been looking at. That is something I've been looking at. Anyway, let's keep it going. Let's keep it going. Looks like there's been a slight recovery, ladies and gentlemen. The portfolio is bleeding out, but not as much. Maybe the tourniquet's working. They called the EMT and EMS showed up. Emergency services, medical services showed up. They put a tourniquet on the patient and they have slowed down the bleeding. They have not stopped it, but they've slowed it down. We'll see what happens. Anyway, let's go to the other side. Let me just glance at my buying power requirements here. And we'll see what happens. I'm going to give it till about noon. I'm going to try to give it till about noon, see if there's anything here. Let me see what the market's doing. Oh, looks like it looks like things have bounced a little bit according to Yahoo Finance. So yeah, I'm gonna play for a little bit of a bounce. We'll see what happens. Maybe Bitcoin gets back up to 92, 93,000. Ethereum climbs back up to 3,100 because those are the things that are going to drag up the MSTRs and the BMNRs. So I'm going to play for a bounce that I can get max value on the covered calls. And then after that, I will decide whether or not I want to just buy the shares there at 530, 540, or if I just, what does the chat say? What would you do? What would you do if you're in this situation? Because there's also a part of me that's like, I'm like, dude, it's going to be like $300 or $400. It doesn't matter. What's better is using that premium to buy more shares and building your share count. And that way you lock in the share counts at least 9,000, say, and then, if the shit gets away from you on the cover calls, it's whatever, because you're selling above your average cost anyway, and you just play the shares from behind. That's what I did on SoFi. Like, I wasn't emotional at all. I didn't care because my whole goal was just share accumulation. And, there's a big part of me that feels like that's the right play here too. It's just like, just take whatever the hell the market gives you on the cover calls and immediately use those monies to try to buy more shares. And you'll feel a lot better about the position when it's at 9,000 or 9,300 or 9,400. And you got the shares for sale at 7. You bought them at 6. You should be happy with that. You should be happy with that. And you just keep doing that over and over and over again. And if it catches a bid, well, that's great. Who cares? You made money. Move on to something else, or let the shares get called away. And then you can turn, let's just say I sold them at 7 because I didn't feel like babysitting it. Well, you can take all of that money. If you still want to be in that ticker, we'll go sell cash, go sell puts at 7 and just do it over and over again. It's mechanical, but it's not Sunny and 75. You're just taking whatever the market gives you. What does the chat have to say? Again, guys, the way these lives work is the more that you participate, the more that I can help you because you're giving me more energy. What's going on, Shamu? Hope you guys are doing well. Let's keep it going. Let's go over here and let's get over to this side. Let's get over to this side here where it is just a little bit easier on the eyes, if you will. Trading. So one thing that happened the other day when I was doing these lives, guys, is remember I had bought some BMNU and I couldn't find it. It's because I had bought them in an account that that wasn't the goal. So I ended up buying those shares here. That's why there's such an awkward number here. I had agreed, I bought these shares for 548 and I bought them on this particular account and I never intended to do that. And now I'm babysitting, a losing trade, if you will. So that's kind of funny. So I will not be making any trades when I'm on this side. That was the lesson learned there. So anyway, let's go through this account real quick. What do we got going on here? Make sure I got it on days to expiration. We got SoFi 24 puts, nothing to look at. Clean Spark puts at 10, chilling. We got a sweet spot trade 150 to 230 on Nvidia, chilling. Sweet spot on Palantir 130 to 240, chilling. I have considered lowering the strike from 240 to 220 on all of these, but I feel like that could potentially create a little bit of a whipsaw effect. So earnings are around the corner. So I'm just going to leave it alone. PayPal, backstop trade at 50, chilling. And then BMNU, should never have bought these shares. This was an accident. So I definitely have to sell cover calls on this one at $6, and they can gladly take the shares at $6. I never wanted BMNU in this particular portfolio. So when we get to the other side, I will do that. Okay, so account ending in 45 should only have 2 positions on it. We got the PayPal at 52.50. And then we got BMNU, 2,500 shares owned at 572. We already had a successful cover call campaign on these. So now we just got to do it again. Now we just got to do it again. So you got to sell 25 calls on BMNU at least at $6, and we're in it for the premiums. We're in it for the premiums. We're not going for any capital appreciation right now. We just need to ring the cash register. Account ending in 19. We got a handful of positions here. We've got SoFi puts expiring in 10 days at 24. Just chilling, $10,000 of meat on the bone there. BMNR. We've got the cover call campaign that's working again. This is like the second time that this cover call campaign is working. So I'm going to try to squeeze a little bit more out of it before I close it out. And then hopefully there's a little bit of a pump on BMNR. And then we can put the cover calls on again because we're bleeding out on the actual shares. PayPal, we got the puts at 55. PayPal is barely hanging on to that level. So we'll see what happens. Clean Spark, we got the puts at 10. Easy money. Palantir, sweet spot, 140, 240. We're chilling. And MSTR, we're like right there, right? We've got the puts at 160, but these are down the road 5 months. So not a whole lot to look at there. Account ending in 90. 4 positions, getting absolutely slaughtered this morning. So let's look. We got SoFi puts at 24. PayPal needs to hang on. Strategy needs to hang on. And then we got 10,000 shares of BMNU at 550 average. So this is going to be a mechanical trade. I'll be putting these shares up for sale probably at $7 here. It'd be nice to wait on a little bit of a bounce. We'll see what happens. Account ending in 01, getting crushed today. So let's look. SoFi is the only one doing pretty well here, it seems. PayPal needs to hang on. BMNU, we got 10,000 shares that were assigned last week at $6. So we're down $1, 97 cents on those particular shares. And also have an agreement to buy an additional 10,000 shares at $8. So that would put the average at 7. So I'm running a 25-25-50 strategy here. So this is 25%. This is 25%. So I got to be willing to buy 20,000 shares to deploy the rest of the capital. But I'm like, well, if I'm going to do that, well, I like to get them at like 450. So just being patient with that. I will look to sell covered calls against these shares here on a little bit of a bounce. Bottom at 6. It's a premium play right now. Like whenever you're underwater on shares, don't even think about capital appreciation. Like I only look like I need to bring some premium through the freaking door because we're bleeding, right? So that's the thing, right? And then I'm like, okay, bought them at 6. I agreed to sell them at 6. The premium I got was like $5,000 to buy them at 6, and then we get another $5,000 or whatever, 3, whatever they offer us uh, to sell them at 6. I'm happy making $8,000 on this particular trade. And then we have an agreement to buy more shares at 8 anyway. So we'll see what happens. Clean Spark, easy money at $10. And then Palantir is a little sweet spot, 140 to 240. Counting in 33. SoFi is propping up all of these portfolios right now. Pinche Puta is holding up pretty well. PayPal needs to hold on. Clean Spark at 10. Strategy at 130. This one's going to be fine. Palantir, sweet spot, doing okay. And then BMU, same thing. Bought some shares at 588. It's obviously down from those levels. So I'll be looking to sell cover calls. I'm targeting that $7 range. Counting in 60. We'll do that one later. Counting in 20. It's having a rough day. We've got MSTR at 135. Nothing to look at there. PayPal needs to hold on. SoFi, we've got a sweet spot trade, 26 and 38. It's barely hanging on the 26. The 38s are looking good. The calls. Clean Spark puts. Palantir is just printing still. Enphase is having a rough time of it today. It was at like 37 and some change last week. BMU is hanging out at 507. And the only other one to look at is the bigger account, down substantially today. Let me put this on days to expiration. So we got Enphase. The $40 calls are printing. The $25 puts, nothing to look at. PayPal, the call should be printing. The puts are getting crushed. Fortunately, I did run these naked calls right here, my rich man covered call. So somebody was asking about a rich man covered call. So what I do is I sell the leaps, the puts, and then I start selling short dated calls along the way. So instead of buying the leap, and instead of a buying and in the money leap option, I want to collect premium. So I sell an out of the money leap option, a leap put, and then I start selling shorter dated calls and ring in the cash register. And it's a trade that has, again, been doing it now for, gosh, probably like since March or so, because I wasn't able to do this on Robinhood. So around since March or so is when I started experimenting with this. And this is definitely my favorite trade. Is doing the backstop trade and then selling some shorter dated calls to bring in some premiums. And I ring the cash register there because if those calls aren't getting challenged, that means that the puts might be getting challenged. But if the calls are getting challenged, then that means that the puts are not getting challenged. So it's like, I kind of prefer this scenario here because this trade, I lock it in, make like 90 grand. I feel good about it. And here it's like we still got 11 months. So I feel like it's going to be okay. I think that PayPal will hang out above 50. But if I can run 3 or 4 or 5 cycles along the way, 6 cycles, and bring in 80, 90, $100,000 each time, it gives me that cushion that I need, especially emotionally, psychologically, to stick with this trade as long as I can, because I've been ringing the cash register on the calls. And also it you get comfortable with the idea of potentially owning these shares, and you're like, well, I'll just freaking sell calls because I would be able to do 2,500 contracts at that point if I owned the 250,000 shares, and you're already getting an idea of how much it brings in. So it's almost like you're practicing, right? You're practicing for potentially taking ownership of those shares down the road, and you're also, you would be qualified for $15 of capital appreciation, like let's pretend, or $10 of capital appreciation because it's trading at 55.70, $9.30 capital appreciation. So you're paying me $90,000 for agreeing to buy to make $9 a share. That's crazy. That's crazy. So you start practicing so you can look at these things and be like, man, this thing's not all that bad. I just got to learn how to manufacture the win. SoFi, we've got a lot going on with SoFi here. We got 500 puts at 23. I feel good about those. We got the 36 short calls, 1,000 of those. We're ringing the cash register there. And then the backstop trade is losing a little bit of money right now. BMU, 125,000 shares at 574. So I definitely got to put these shares up for sale at probably $7 and ring the freaking cash register, because we got an agreement to buy 100,000 more shares at $8. So there's that. NVIDIA is a sweet spot trade, 160 and 230. The 160s are getting challenged a little bit more. The 230s are obviously not getting challenged at all. I could consider lowering the strike price from 230 to like 220 or maybe 210 to bring some more premiums through the door, but I won't look to do that until we get over 50%. So I need to collect another $1,000 over here on the calls, and then I'll consider doing that. Riot, we got the puts at 15. I feel good about those. Palantir, sweet spot trade, 140 and 240. I mean, it's just absolutely picture perfect. And then we get this little backstop trade that we did 513 days out at 50, which is, we're chilling. Strategy has gotten his ass kicked today substantially. They definitely did not play this one well last week. Gave up $50,000-$60,000 that I didn't need to, but that's where my crystal ball was broken. It is what it is. This one here looks pretty appetizing to sell some puts at like 130. That's definitely something that appeals to me. We'll see. Apple, 220 and 240. The 340s, the 220 and 340, the 340s aren't really helping. So I may consider bringing those down to like 320, see if that will help a little bit more to make this a little more delta neutral. But I like to do that when I'm at 50%. So I'm not quite at 50% yet, so there's no rush there. Google, 220 and 500. Based on the way it's performing today, it tells me that the position is pretty delta neutral. So I like that. BM&R is just getting crushed. 44 average. And then I got the 400 calls. I have considered getting rid of, I wouldn't do it right now, but if I could get to even on Apple and Google, and I know I took 7-figure losses on these last year, but I would consider closing these out to free up $500,000 in buying power if I could get to break even. And when I can lock in another win on Palantir, that's another $500,000. So that's 500. That's $1 million in capital that I could free up of capital requirements. I'm going somewhere with this. This is why I'm walking y'all through it. There's not a lot of capital requirement there on Riot at the moment. NVIDIA is another 100,000. If I could lock in a win here, I may consider taking that off the table. I'm going somewhere with this. BMU, looking at adding another 25,000 shares there. SoFi here, and these come off the table. I'm considering not putting them on again for a little while. Going somewhere with this. PayPal, this one's just an absolute picture perfect trade right now. So I ain't doing anything with it because I'm like, okay, yeah, it sucks to be down a little bit on on the long-term puts on the backstop trade, but they're not really causing me a lot of stress. And I like ringing the cash register, $85,000 and $90,000 in 24 days. That's crazy. And the end phase, I love the way this trade's playing out. Absolutely picture perfect. So I'm trying to free up about $1 million and a half of capital requirement buying power. Why? Good question. Glad you asked. Because I'm considering buying another 100,000 shares of BMNR. I'm legit considering buying another 100,000 shares of BMNR so I could lower the average to like 37. Why? So that I could just sell covered calls and not even think about it. Because that would bring in some pretty good premiums. Just doing monthly. I don't care what it's at 38, bringing in some pretty good premiums. And that would be 2,000 contracts. So that would be like $180,000 a month in premiums. And I would be agreeing to sell them at my average cost. So it's called average down to average out. So that is something that I am strongly considering, especially if we get to like 26, 25 bucks. I will very likely pull the trigger on that. I will very, very likely pull the trigger on that because then I lower the average to 38. Let's just say 38 is the number. I lower the average to 38. I eventually sell the 100,000 of those shares at 38. And now I'm left with 100,000 shares, but with a $38 average cost versus the 44 that I have now. So I call it averaging down to average out. So that is something that I am considering doing. And then if it just stays at these levels and I'm bringing in $180,000 in premiums a month, it's going to take the sting out of being down, so much on the shares and those leaps. And I could also consider, after I own the new batch of 100,000 shares for 31 days, I can potentially consider taking a loss over here on these leaps to offset some of the gains, because like PayPal's printing, right? The short calls are printing. Enphase short calls are printing. SoFi is printing. So I have stuff in the portfolio that's printing. NVIDIA's, I feel like it's going to print at those levels. I feel like this Riot put's going to print. This Palantir position is going to print. So I don't just look at what's losing money. There's a lot of stuff here that's fortunately making money. So I'm like, this could be an opportunity for me to offset some of those gains, because I did that a little bit. I took a small loss on the leaps that I had bought on ASST to offset some of the gains. So I was like, I don't really want to close out these leaps, because if this thing does go on a tear, if at some point one of these crazy predictions that Tom Lee's made, they start coming to fruition, this is my license to be able to sell naked calls, right? But then I'm like, okay, well, or to sell calls, covered calls. But I'm like, well, I still have all these shares and I can sell calls against these. So, there's a lot of gimmies and gotchas, man. This is why I walk y'all through this, and I try to talk to y'all about all the mindset, because it's all situational. DJB, I like the idea of using premiums to buy shares, but not so much on leveraged products. And that's fair. That's fair. When you decide to roll a put to write up the price appreciation, I'm not sure if I understand that. Whenever you sell a put, there is no capital appreciation that you're qualified for. So I feel like I'm not understanding that question. DJB, the leverage product for me is a premium grab on both the cover calls, at least till the premium doesn't make sense. The longer the data cash price, I don't mind a sign, then the yield. Yeah, exactly. When you're talking smaller wins, taking smaller wins, it allows you to go bigger on your position. And then over the years, you're taking real big positions. So taking just $1 or two wins on stock becomes significant. How do you lose with Google and Apple? You could have still been rolling. Really good question. The only reason I chose to lock in those losses was for taxes because I was up over $3 million when we moved over from Robinhood, and that was going to be like a $1.25 million tax bill. So I was like, well, I'll just go lose 2 million on Google and Apple, and then I'll wait my 31 days and I'll put the trades again, and I'll go make that money back over the next 2 or 3 years on Google and Apple. So I was just like, we don't feel like paying the government another 1.25 million. So that's why I chose to do that. But you're absolutely right. I could have just kept rolling, but it was literally just for tax purposes. It felt less painful to take a paper loss over here and not have to stroke an additional $1.25 million to the IRS so they could go do whatever they do with that money. I was like, yeah, I think I'll just do that. So that was it was that's probably the toughest decision I've ever had to make in the stock market, was taking losses on a stock that I could easily have manufactured the win on. But I was like, well, I could always put those trades on again after 31 days. But there's other shit that I'm in. So I've got those trades on. They're just not as big anymore. So once I can manufacture the win on strategy and BM&R, then make no mistake about it, I'll be back to like 1,000 contracts on those Google and Apple so that I could try to make that money a little bit faster and then just deal with the tax implications in 2026, 2027. But the tax implications for 2025, they had just gotten out of hand. Like it just, because we never made that kind of money before. So I was just like, okay, this is different. This is different. So it was just a tax strategy. Got caught my hand in a cookie jar on BM&R rolling. In what aspect? The puts, like did the puts go against you? I appreciate you guys tuning in, man. 798 people on X and 68 people on YouTube. I appreciate each and every one of you guys. Let's see if we can. Scott, sorry to Mar trade. I've been averaging into shares as of late. Have you built out your M's thesis on them? The sheer BTC value for me relative to the market cap drove me to purchase recently. Real good question. Yes, I've been researching Marathon. I was in Marathon previously, so I'm very familiar with the company, but I stopped following them because from an infrastructure perspective and just the fact that the facilities were like so much more professional with Riot in comparison to Marathon, basically using like containers. I was like, this company just looks like a lot more legit to me. But Marathon has a really huge hodl, right? Like they got like 45,000, 50,000 Bitcoin. And they're talking about a pivot, right? An HPC AI pivot. But their baby is still Bitcoin mining. That's why they have like the most exahash and stuff. But they do carry a lot of debt. And there's already been like 3 pivots in with the Bitcoin miners, right? And one, it was all about exahash. And then it was the new girl in town was the convertibles. Remember that? That wasn't too long ago. And then now it's HPC AI. So if I get a chance to talk to Jason again, I'd like to ask him who Riot is. Who is Riot now? Because at first it was like the North Star, we're going to get to 100 exahash. And then they issue a convertible. And then now, like, it seems like they're all in on the HPC AI. So these companies are all like evolving, if you will. So you got to keep up with them, right? That's why I don't like to bring on too many tickers because it's like a lot more work. Yeah, I've got puts on Riot at 15. 200 of them right now. I'm looking definitely to build out a bigger position in this particular portfolio on Riot, and Marathon is looking intriguing. Marathon is looking intriguing. That Bitcoin hodl is nothing to sneeze at, guys. No, I'm sorry. I'm tired. I'm tired. My wife and I have been watching a lot of TV the last couple, 2 or 3 days, so I'm just genuinely tired. But yeah, it's one of those things. How do you check capital requirements? Whenever you put on the trade, it tells you what the capital requirement is going to be. Like if I put on a trade, any trade, right? Let's just take SoFi. If I go trade, you go, let's just do right here 59 days out because I don't have anything. And I'm like, oh, I love it at 30, at 22. I get at 22, just one position there. Review and send. Right there on the bottom, it tells you reduced by $222. So they pay you $88 and they reduce you by 223. So that's the buying power requirement. And SoFi is typically one of those like 40, 50% stock as far as margin maintenance. So you just get familiar with what they are. Like I know on Robinhood, it shows you what the margin maintenance requirement is on those particular stocks. I haven't been able to find that metric on Tasty Trade. So yeah, that's what's going on. Looks like the little slight recovery here, nothing crazy, but a slight recovery. This Palantir is just printing like clockwork orange, man. It's crazy. Absolutely crazy. MSTR is bouncing ever so slightly. Apple and Google. See how these are only at 200 contracts, guys? Those will be at 1,000 contracts. Well, I don't know about 1,000 because I got to be able to cover the notional, but they could definitely get to 500 contracts. They could definitely get to 500 contracts, but I want to make sure that the macros hold up because the last thing I want to do is be babysitting because this is already $4 million right there, right? So the last thing I want to do is be babysitting $15 million in notional to the downside on both Apple and Google at the same time because these expire just a month apart. So yeah, I think I have to be okay making this money back over the next couple of years. Like it doesn't have to happen this year, especially when I feel like I am going to make a shitload of money on BMNR and MSTR this year. So there's that. But yes, trying to build a position on Riot, and then the other miner that I'm really seriously looking at right now is Marathon. Uh, I know Iron's the talk of the town, guys, and I think it's an amazing company. But I'll tell y'all why I've stayed away because they have a huge deal. They have a huge, huge deal with Microsoft. But they also have to buy like 96 or 98,000 GPUs, and that's going to cost like $5 billion. So there's just a lot that can go right, but there's also a lot that can go wrong. So I'm like, if I really study tit for tat, because there's like, there's less than 10 HPC AI deals that have happened with these miners, with like TerraWolf, with Hut, with Riot, with Cypher, with Iron, and Core Scientific, and CoreWeave. If you really like really just objectively study the deals, like what I look at is how how are they retrofitting? Are they just building out data centers? Like what are they paying to do this? These miners, like what are they paying to do this? And then ultimately you look at I think it's called NOI. You look at the NOI per like megawatt, and if you really study the deals, I mean, I'm talking about objectively, not like put on your Iron cheerleading outfit on or anything like that, or the Riot cheerleading outfit on. But if you study, yeah, 20%, that's still $5 billion is a lot. They're having to raise a lot of money. They're having to raise a lot of money. And don't get me wrong, they're playing big, so they're going to probably get some really big results. Do I think it's going to work? Yes. But the reason that I've kind of like stayed away, it's because I feel like there's plenty of time. There's going to be plenty of time with that particular investment. But where I was going with this is, if you look at the ROI from these deals and how long it would take for them to get their money back, because there's a capital outlay for them to participate. It's pay to play, right? Core Scientific's deal is better than all of them by far, and it's not even close. Riot second, but Riot's also the smallest deal. Riot is also the smallest deal, but the terms are really, really good and they could get better. So it's early. It's early in this HPC AI race. It's early. So I'm like, I only want to pick two, maybe three. I don't want to be invested in every freaking miner because then you got to follow everything. And I got money. Like, I just feel like the PayPal money's easier right now, you know? Um, so Riot's my horse. And I love that they're taking their time, but they put something together that makes dollars and cents for them. And they're able to go online right away by the end of this month. By the end of this month, they're able to go online. Uh, so I don't have to be in a hurry. I don't have to be in a hurry to invest in Cypher. Cypher's got some sexy stuff going on. Wolf has sexy stuff going on. Yeah, a lot of them do. A lot of them do. So we'll see. We'll see. I don't think this is a winner takes all market. I don't even think it's a winner take most. I think there's so much energy requirements for data centers that a lot of these companies are going to win and win big. So if I just position myself and size myself accordingly on Riot, I think instead of spreading myself too thin and having to learn more about other companies and following their mission and stuff, I just think I can make all the money that I'm looking to make on Riot and call it good. But Marathon is very, very appealing just because I feel like they're being disrespected. I feel like they're being disrespected with what they've been able to do with Bitcoin mining. I feel like I haven't given Fred Theo his just due also because there was like some inconsistencies 3 years ago or so, but it's also like, where was the company at that time, right? So now it's like it's a different landscape. I think Marathon might end up surprising a lot of people as well. They may be the last ones in the space, right, as far as the HPC AI, but they do have a shitload of Bitcoin on the balance sheet. And if Bitcoin catches a bid, they're going to be sitting on a very, very, very commanding position because, 50,000 Bitcoin is 50,000 Bitcoin, right? So there's that, and then Riot like just dumped 1,000 of their Bitcoin to fund, the expansion that they got going on, the retrofitting and everything else. Uh, so, kind of like keep that in mind. It's interesting. It's interesting stuff, man. It's an arms race. It's an arms race. It's going to be very, very fun. Anyway, guys, I got to get rocking and rolling. I appreciate each and every one of you guys that make any trades. I'll post them on the chat on our WhatsApp group and kind of go from there. But for right now, in the meantime, we're just kind of taking it easy. We're just kind of like it's a little bit of wait and see. It's a little bit of wait and see, but trying to be patient. Trying to be patient with this BMNU, so I could try to maximize the premiums that come through the door. But if I just feel like it's just not going to happen, maybe the Donald says something, I have to go follow the political landscape, right? Follow the tweets and stuff. I feel like if it's just not going to happen, then it is what it is, man. It's not always sunny and 75, but I got to bring some money through the door. I will go just sell the covered calls on the little account, and then I'll use those premiums to buy more shares. And it is what it is. So the money that I'm not making on the covered calls will be offset by the fact that we will go from 8,500 shares to like 9,000 or 92, 9,300, whatever we're able to get to. Anyway, I got to get rocking and rolling. TJ the Wheel Deal signing off. As always, may your skies stay blue, stock screen. Peace out. God bless you guys.
You gotta know.